Greetings. Welcome to my weekend market recap, 7th October 2023. I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using the Q systems and techniques that I developed, which can be used in any country in any market. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. I share the analysis always before knowing the results, and they tend to turn out quite well, aka they tend to be quite profitable. And the secret is that I use 100% real-time analysis, and I not only look at technicals but I try to align forces from market, sector industry rotation, fundamental score, as well as seasonality sometimes with the trades. Because I align all these forces with my trades, they tend to be truly high probability trades. And you probably know that if you are following my analysis on X or on YouTube. Now that brings me sometimes to the question that if my success rate is so high, the people who are watching these videos, are their success rates so high? And when I talk to some of the traders, some of them use Q, some of them use Q plus other systems, many of them actually don't have that high success rate. They have high enough success rate probably, but maybe not as I have, and that is because having the system does not mean they are following the system. What is different? One thing that is different is my years of practice using these techniques, and more than that, my experience tells more than that, what is different is their conviction of following minimal systems. I use Q and only Q systems, and that makes my decision making easy. I can decide without ambiguity whether to go long, short, or stand aside. That is my preferred trading direction. And once I decide that based on market level analysis, then I may try to find actual trades. But the first step is to find the preferred trading direction. We'll see all these concepts in play during this week's market recap also. Before that, disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades, and I am responsible for the outcome of my trades. Options trading can be risky. I trade them in a way that reduces the inherent risk in options. And before you trade options, you may refer to the characteristics and risk of standardized options document from OCC to decide if it is suitable for you. It may not be suitable for beginning traders. As I tend to say, if you are not able to make profit from trading stocks, your loss will be multiplied if you start trading options. So better, in my view, to make sure that you have consistent profit for at least 1 year trading stocks, and if you can do that following a disciplined approach, then you may start trading some options. That's my view. Will you start doing that? I doubt that. These things don't work like that. But it's my pleasure to share my observation. You may take it the way you want to. As I mentioned, one secret of my trading success, and I left work 11 years ago at the age of 46. I'm 57 now. I didn't have to go back to work. And the secret is I use minimal systems and only one suite of systems that helps me decide unambiguously what I want to do. All the Q components run on Metastock platform, and if you are trading in the USA market, the technical analysis component can run on TradeStation as well. Of course, it runs on Metastock too. Now, in these sessions, I also like to look back and see how things played out from what I discussed in the previous session. The YouTubes are stored, of course, on YouTube channel. You may go back and review. Sometimes it is a good idea to re-watch last week's market recap and then see this week's market recap to see how my analysis is flowing from one week to the next. In the last week's market recap, I mentioned that dollar will continue to remain bullish until these trend lines are broken. I did not say that it has to create lower high, lower low. We can see one trend line is broken, but another is not broken yet. If I clear the lines, at the very top, once again, came the bearish indecision, and after that, even more importantly, the bearish headwind unique reversal signal. Friday's candle also has bearish flow. What is the Q guidelines? And the Q guidelines work on all liquid instruments, therefore it should work on dollar index also, or the ETF UUP. Q guidelines is to look for a short setup if we have bearish headwind signal. Did we have a setup? No, we did not have a setup because the trend line support was too near. The other guideline is if the headwind did not give a trade setup, look for the first bearish flow after the headwind. We had bearish flow on Friday. Did that give us a trade setup? No, because once again we have trend line support very close to Friday's closing price. But Friday's candle is bearish, therefore looking at the bearish headwind, prior to that the bearish indecision, then the bearish flow, then bearish shape in daily, and the bearish indecision in weekly, bearish shape in weekly, my conclusion is that more likely than not, dollar index will fall further. Will it fall on Monday? Maybe or may not be, because there are trendline supports, but there are many reversal signals. So even if it goes up, I will anticipate that it will break the next trend line support too, sooner rather than later. But I am not going to take a trade based on the anticipation. I may get ready with position sizing, etc., but not actually take the trade unless that event occurs, the breakdown below the trend line support occurs. And if that occurs, that will be bullish for the market. That is exactly what I told in the previous market recap. Now you see how much importance I give to these trend lines, be it support, here they are support, sometimes resistance, called memory trend lines. They hold quite well, be it support or resistance, and therefore breaking of them is also significant. In fact, we have a Q breakout trade setup based on breakout from these resistances or supports. And last weekend, there was only one trade that I shared publicly, only one. That was a breakout setup. So let's move to that trade setup that I shared. You will see how these ideas play out successfully. I tweeted, not this one, I tweeted about SLB on 29 September, that is the Friday 1 week ago, and I'm tweeting it in the morning session. What am I tweeting? what about a stock in the decelerating and weak industry and oil and gas? What about a stock in decelerating weak industry, that is oil and gas equipment? That was SLB. The stock was overvalued, and if you look at the trend line, it was breaking below trend line support. We had a bearish headwind earlier. We had a bearish flow along with the breakdown. Weekly was creating a false upside breakout and coming down after cluster of bearish indecision, then bearish backdrop. We also had a breakdown with big move down 3 with bearish pressure, and all these were happening at price extreme high and reversing. I mentioned I trade options, but I trade options in a way to reduce their risk. Usually, and that is usually, not always, usually I avoid trading naked options, but I also say I am happy to buy naked puts if I am finding a short setup at a high price level. And here we have price extreme high. So in the last market recap, I announced before knowing the results as usual that I was holding a naked put on SLB that I took as a breakdown short setup. Now I shared this analysis in the morning session. I could use the precise entry or fine tune real-time charts on Q systems to make a entry within the day itself. I did not wait for the day to close, but I therefore had to watch to see if the breakdown was confirmed, because from 10:51 a.m. to 4 p.m. anything could happen. It could go up back above the trend line support, and in that case the breakdown would not be confirmed. But was it confirmed? Let's look at the stock. We are talking about this day. Indeed, the breakdown was confirmed. We don't see the trend line support here because it is broken. If we go to Q Elite, we are able to see the historical trend lines. Let us do that. The breakdown was confirmed on this day for sure, but I could enter it precisely during the day itself. In either case, the breakdown setup was confirmed, and after that price fell down enough to give us a very profitable swing trade. You could book at least partial position profit in the trade. If you traded options like me, you could have a GTC order at 50% of profit, and that would probably be hit. You may check that out. Even if you shorted with stocks, then I would book at least partial position profit in the trade. That was in fact the only trade that I publicly shared in the last market recap, and I tweeted also on Friday. And we see, if we come back to dollar index, or let's look at EUP now, the ETF equivalent of dollar index. And you see that UUP chart is little different, and that is expected because it is an ETF, it's not an index. Both more or less follow each other. Here there is no trend line support. We have instead a bearish reversal candle on Friday that is also looking bearish. If it continues to go down, that will have a bullish effect on the market. But that we are talking about based on Friday's candle, not based on Wednesday's candle, isn't it? If I again go back to dollar index, and you will see how much emphasis I am putting on the market level analysis, but I am doing it unambiguously. Now I am explaining during YouTube live session. It is taking more time. My effort is for you to understand what I am doing. In my own trading, it takes only a few seconds. See, we are talking about this trend line support to be broken. We are talking about this support being broken on Friday. So those are all things we are discussing on Friday's candle. But Wednesday we had a bearish headwind that was on dollar index. That was no trade setup because memory trend lines were there. But why I came to Wednesday? That will be to explain another powerful aspect of, in my jargon, powerful is profitable aspect of Q trading that was visible another tweet. I tweeted on Wednesday, October 3rd, again in the morning session, with a chart of IWM when IWM was breaking below multiple trend line supports, and see how different aspects of Q are coming together. It's not one signal, it's not one breadth indicator, but I am looking at the individual signals, that is the trees, and combining them and looking at the forest to make a decision, an unambiguous decision. And this is a great example of that. Again, I am looking at trend line support that is breaking, that is bearish. However, I am also seeing that it is below lower boundary. It is overstretched, that is oversold for 2 days. There is no reversal signal. It is very bearish. When I am tweeting this, the candle shape is also bearish. But what am I saying in the tweet? The market is down. IWM is the worst performing ETF, down by 1.6% at that time. However, I said it is too oversold to initiate new shorts. That was not from the, that decision was not from the technical chart, not from that technical chart, but from a breadth inside from Q edge at the same time, real time. The breadth indicator was this percentage of stocks in S&P 1500 below lower boundary that hits 36.9% when I shared it. Whenever this percentage hits 30 to 40%, it is too oversold to take new shorts. Can it go down further? Yes, it can. But is it safe to short at that time? No. And that we have seen playing out successfully, meaning profitably, over and over and over and over again. That is why whenever this percentage hits 30 to 40% at the lower side, I stop shorting. When it hits 30 to 40% at the upper side, I stop buying. That is the overall approach. And based on that, again, when the market was very bearish on Wednesday in the morning before 11 a.m., I told it was too late to short. Let's look at the market ETFs in the USA market now. SPY, using weekly daily at a glance chart. The more you look at my unambiguous analysis, you will realize I am not doing anything special that you could not do. I am just looking at the trees and looking at the forests at the same time and coming to an unambiguous conclusion and having confidence to share that publicly before knowing the results. This was Wednesday for SPY. That was the day market made the recent low. Thursday, Friday, sorry, that was Tuesday. Let me go back to the tweet. 3rd October, Tuesday. I'm sorry. It was not Wednesday. I figured that out from the chart. October 3rd was Tuesday. Tuesday, the percentage of stocks below lower Bollinger Band, hit 36.9. In fact, I watched it for a while more. It hit 40% also during the day. So that was Tuesday. Tuesday morning, I'm saying it is too late to short. This is Tuesday for SPY. I caught the low of the recent down move. Everything was bearish on that day, but I made the right call not to short. Incidentally, Wednesday had a bullish headwind and also a bull release signal. But we wouldn't buy SPY because there was a trendline resistance. Thursday, bullish shape candle, but did not break the trendline resistance. Friday, if you were ready, you would buy right when it was breaking the trendline resistance. And you would also notice the trendline support in weekly. Again, if you look back, not only previous week, if you look back to this week, in that market recap I mentioned that I am expecting SPY to go down more and find support in this weekly trendline support. That was exactly what I said 2 weeks ago and played out beautifully, aka profitably. Now we have a cluster of bullish indecision. In weekly, a beautiful breakout. In daily, with bullish flow that came right after bullish headwind. Q guideline says we can buy. If bullish headwind did not give a buy setup, it did not because there was a trendline resistance, then look for a buying opportunity in the next bullish flow day, which was Friday. SPY chart, this analysis is telling us that we could buy on Friday. But I will again look at the forest. All the information I'll combine together and I will come to a conclusion whether my preferred direction is bullish, bearish or stand aside. SPY is telling let's be bullish. Let's look at QQQ. This was Tuesday. This was Tuesday, the day when I said it was too late to short. That caught the low of the move and then Wednesday, Thursday, Friday it went up. Am I going to buy QQQ? No, actually. Because SPY had a breakout in daily, SPY had a trendline support in weekly. We don't have that in QQQ. We have a bullish flow, but weekly is not supporting a flow trend following long trade in QQQ. So QQQ does not have a trade setup, but SPY has. Dia, this was Tuesday when I tweeted it was too late to short. After that, we have a cluster of bullish indecision. Wednesday and Thursday. On Friday, we have a bull release. We have a breakout, but we have a large upper tail. I'm not going to buy Dia. I would rather buy SPY. Here also, in weekly, price came very close to the trend line support and went up. IWM. This is the chart on which I based my tweet on Tuesday, on this day. Actually, IWM was falling sharply for 3 days in a row, but still I was confident to tell it was too late to short because of my confidence on the Q techniques. It works more often than not. Then we had cluster of bullish indecision on Wednesday, Thursday. We had a bullish headwind on Thursday. We had a bull release on Friday. However, I'm not going to buy IWM because it has trendline resistances. Here in weekly, price tried to regain the trend line support but could not. If next week market is going down, which one I like to short? That will be IWM, because it could not regain the weekly support and it is closing below daily resistance, opposite to SPY. SPY could gain the support in weekly. SPY is breaking out in daily. IWM is opposite. So my conclusion is, if the market is going up next week and I wanted to buy any of the market ETFs or futures, I would rather buy SPY. If market is going down, based on weekend analysis, of course Monday's movements may be different and I can see that in real-time charts, but based on Friday's analysis as of this weekend market recap, if market is going down, I like to short IWM ETF or futures. If I am trading stocks, I like to short small caps, and if market is going up, I'd like to buy SPY constituent stocks. That is my analysis on the market ETFs. Bit of a mixed picture, more bullish than not, but small caps are not to be bought. That is what it is telling. Not as of, not to be bought as of Friday's analysis. We saw that the percentage of stocks below lower Bollinger Band hit 36.9. In fact, it hit 40% on that day. That was Tuesday. How is it now? Look at Q edge. The percentage of stocks below lower Bollinger Band is only 5.1%. So from 40%, it has come down a lot. Therefore, several stocks went up. It went up from below lower Bollinger Band to somewhat above, but it is still more bearish than bullish. We can see also from here, 74% of stocks are below mid Bollinger Band. It improved significantly between Thursday to Friday. In fact, it improved significantly from Tuesday close to Friday, but it is still bearish. It is a recovery inside a bearish move, not a finding support in an uptrend. What about sector industry stock advanced decline breadth? Another market level breadth inside. Longer term periods, 10-day, 1 month, bearish. Weekly period, 5-day is also bearish. Only short term, 1-day, 2-day are bullish. So it is possible that the bullishness will continue up. In that case, I'll buy, and I like to buy SPY constituents. It is possible that market will turn down from here. In that case, I like to short small cap stocks. That is my conclusion so far. What about technical breadth? You will see, if you are following me, that some weeks I am able to make a decision based on technical breadth when all others are indecisive. So far, external view of the market from ETFs is somewhat indecisive because IWM is not bullish. Sector industry edge breadth is indecisive. Bucket analysis, it recovered, but it is not bullish. Still 74% below mid Bollinger Band. That's bearish. So let's see if we can find something more bullish in the technical breadth. Again, a unique component of Q systems. And one gentleman commented very accurately why my success rate is high, not only in terms of trading, but in terms of preferred trading direction, is because I am looking at the market level from diverse angles and disjoint angles and combining the information to decide my preferred trading direction. If they are all aligned, it is easy decision. If they are unclear, I may stand aside. Let's look at weekly technical breadth. Mixed. If we look at all setups, it's mixed. We may stop there. It is mixed picture in the weekly interval. On Friday though, it is hugely bullish. 90% of all setups are bullish, and across all categories we have 79 to 96% bullishness. That is very strong reversal on Friday in terms of technical setups. We also see two alert levels hit both on the bullish side. Bullish headwind hit the alert level, and green candle low, that is bullish candle at oversold level, down level, also hit the bullish threshold. So the daily technical breadth is telling it is okay to buy, but the other breadth insights or external view of the market using ETFs is telling that it's not time to buy yet, maybe starting to get ready but not yet. So conclusion so far is I may look at some buy candidates, certainly not look for short candidates based on what I am seeing so far. But one aspect of market I have not seen yet, that is the internal health using Q market breadth. But before that, why don't we take a break and look at the global markets? Why do I look at the global markets is not so much that you are trading on all these markets, but it gives you and me also to build the confidence on following a systematic approach. We see the analysis, and because global markets are in different countries, we will find different kinds of setups, different kinds of approaches to look at them. That is a good learning session, good practice session, you may say, good walk around. Is it walk around? No, probably no. I walk around with my camera. Good walkthrough session. That's why I go through the global markets, not that you are going to trade in all these markets. But if Metastock is slow in opening the global markets, well, I don't have to look at them, at least not now. But I will point you to the global index, custom global index. Is it bullish? Is it bearish? Neither. The custom global index is moving inside a box. Not bearish at all, much stronger than the USA market. And when it is moving inside a box, see, I mentioned we are learning about the techniques to build confidence. Every time in a box, when it comes to the lower edge and gives us a bull release, we are ready to buy. Of course, we cannot buy this custom index. We could drill down into individual countries, find the most strong country. We could then drill down into the strongest sector, industry, fundamental, technical, and buy those stocks. The approach is the same, whether it is an index or a market, future, forex, etc. Looking at the box pattern and the bull release, if anything, I would like to buy, not short here. Now let's look at it using weekly, daily. That shows the complete picture. Why I say complete picture? Because Q trade setups have unambiguous checklists. The checklists are based on weekly and daily both, longer term and shorter term both. That's why I like to look at weekly, daily both. And it is a bit slow, and as I am not going to wait for it. So we saw that weekly global market is telling that we could buy. Let's now look at the very powerful and useful Q global market breadth for the USA market. It's amazing how much colorful indicators can be used to provide a lot of insights on a single chart, all based on breadth insight, internal health check. Nothing on this chart is based on a single stock, not even on a single market ETF or index. Everything is about breadth. I rely on it a lot along with other breadth insights, that is technical breadth and sector indices stock breadth. I rely on this also to decide my preferred trading direction. And if we look back, let's look back a bit. Series of Mango, irrational exuberance, thanks to Mr. Ian Woodward, who invented this indicator, and few others on this chart. May him rest in peace. I stopped buying and I mentioned that publicly. Hindenburg warning, Hindenburg confirmation, time to short. Hindenburg confirmation again, time to short. What did I say in the last market recap? I mentioned that I was looking for a bullish color that could be a large accumulation count or a Eureka signal to come at the right age for me to start buying. Why was I saying that? That was because the market was very oversold from this breadth perspective. One was percentage of stocks above 50-day MA was at oversold level. Everything is visual. We never have to read thresholds or compare thresholds. Whenever it goes below this lower threshold, it's too oversold. Also, the 3-month new high low, which I started plotting on this chart after following Mr. Jeffrey Scott, Dr. Jeffrey Scott. Several of the improvements on Q systems came from the way he looks at the market, at stocks, and also several other traders who used Q and provided me their inputs over the years. So 3-month new high low also hit the oversold point. So I was looking to buy, but I was waiting for either an accumulation count, significant one, that will be in green color, or an Eureka green candle, but that has not come. I'm still waiting for that. Let's now look back. Technical breadth is telling on Friday's breadth was so bullish, plus 2 bullish alerts on green candle low and bullish headwinds, that I am willing to buy, but external view using ETFs, internal view using market breadth, breadth view using sector industry stock breadth, and weekly technical breadth is telling it is not all clear yet. So I may look for some buying candidates, but not a lot. However, I will also like to look at this beautiful candle chart using weekly daily. This is a true representation of the USA market, and see a beautiful pattern here. Not very dissimilar to what we saw in SPY. Weekly has a trendline support which held beautifully for 2 weeks in a row. This week's candle shape is bullish. We have a bullish indecision cluster. One is important, cluster is even more significant. In daily, we have a bullish headwind and then a bullish breakout. USA market breadth total view weekly daily candle chart is telling that we may look to buy now. Now, incidentally, you will notice the breakout setup in Q systems approach can come in uptrend sideways market as well as downtrend. Here it came in a downtrend, and therein lies one difference probably of Q techniques from many other techniques. Q techniques allows, and I'm very comfortable of buying stocks in a downtrending market. That is why I distinguish between market direction and my preferred trading direction. If you look at this holistic representation of USA market, it is downtrending. Why I'm saying that? Because the primary trend is decided based on daily, which has lower high, lower low. That is the classical definition of downtrend. So in daily it is downtrending, but I am able to buy based on a breakout in a downtrending market. And I do note that a bullish headwind caught the very low, but I wouldn't buy at that time because the trend line resistance was not broken. So I have reasons to buy in this market. Now let's spend some fun time looking at some stocks in the USA market. I am not going to look at many buy candidates, but I will show, and every weekend market recap I may look at things from different angles to demonstrate also how many different ways you may use Q systems. On Q Elite, I have several instruments on the left. I have the market ETFs. Let me point to them. I have the market ETFs. I have some of the commodity ETFs, dollar ETF UUP, some of the common ETFs, usually growth related, ARKK, FFTY, MGC. Then I have the futures. I do look at the futures every day. Though in market recaps, I may not have time to look at futures ETFs both. I look at the futures every day, the market futures and the commodity futures. You can also see significant moves are highlighted already in this simple Q radar. Of course, I have much more detailed Q finder using radar on TradeStation or Q finder using Metastock, which shows proper trade setups. But just a look at the percentages highlighted in green shows the market was very bullish on Friday. One thing also catches the eye, that was mega caps. These are all mega caps. Mega caps went up significantly. So let's look at the mega cap custom index. We have the tech mega cap custom index in Q global market breadth. On Friday, we have a bullish day with a bullish flow. But am I going to buy mega caps? Not so. Using the mega cap custom index, it is telling no, there are many trendline resistances. Why bother to buy? There are better buying opportunities. In fact, if you look at the SPY chart and the mega cap custom index chart, it is unambiguous that it makes better sense to buy SPY than mega cap custom index. Having said that, one of the and see, this is how I'm explaining different ways of using Q systems from different angles. You could use bottom up, I use that. You could use top down, I use that. And sometimes I look at the mega caps, sometimes I look at news and look at stocks from there. So I looked at the mega caps. One stock that caught my eyes was AMD, very well known tech stock. Now here again I am different from many other traders. Well known does not mean much to me. It has to be liquid, but it does not need to be well known for me to trade it. I have no weightage in my mind for short-term trading, for well-known stocks. No extra weightage. Why I came to AMD, if you look at all the other mega caps when you have time, if you would care to, using Q systems, you will notice that AMD is the one that is giving the cleanest breakout on Friday in daily, and that was the very first day it successfully broke out after many weeks. In weekly, we have a bullish backdrop. So, am I going to buy AMD? I mentioned the name itself does not carry much weightage in my trading. AMD is a well known stock, but I wanted to look at its fundamentals before deciding to buy or deciding not to buy. So, let's do that, making the best use of the Q360 degrees technique. Let's look at AMD. I typed the ticker symbol and this is Q Vital. It is fetching the Refinitiv identification code RIC. Let's see if it is able to do that. Sometimes during the weekend, Refinitiv data connection is not fast enough, at least for me. I live in a village far from Bangkok, about 800 kilometers from Bangkok. Internet is good enough for trading, not perfect for such YouTube live sessions. The scorecard is already calculated. The industry is very strong, no doubt about it. 88% of stocks in the semiconductors industry went up. Very strong. However, the stock itself, AMD well-known stock, but as per Q scorecard, overvalued, negative earnings growth, no fund accumulation. Just short squeeze is not enough for me to consider buying. No dividend yield also. If you look at the graphs, earnings per share growth down, revenue is also down. Not a stock I'd like to buy. And I stop there. See, I am trying to align forces from multiple dimensions. Market level, I decided it's okay to look at some buy candidates. Okay, so I found AMD as a breakout candidate technically, but fundamentally I see it is not good enough for me. And I stop there. I don't have to go to look at industry, not yet. But I do see that a large percentage of peer stocks went up. Maybe some of them has great valuation or some of them have great earnings growth. Now, I could buy based on valuation, I could buy based on earnings growth. Which one do I prefer this week as of this weekend? That answer is also on Q Global Market Breadth. So let's go back to Q Global Market Breadth. See how I'm looking at the trees and looking at the forests and making my unambiguous decision. On the market breadth chart, we have growth versus value, small cap versus large cap. When I looked at IWM, I already concluded that if the market goes down, I'm going to short small caps. That is, I am not so bullish on small caps. And here also, I see confirmation of that from a different angle. Remember, from a different angle, from a different viewpoint. Small cap versus large cap coming down. Small cap is underperforming. Why will I like to buy that? I will not. I like to short that if I have proper conditions. On the other hand, if we look at growth versus value, that is going up. So I prefer to buy growth stocks. Yes, I could buy undervalued stocks also. Q allows that. But if I have multiple candidates, I would like to buy growth stock in the same industry. Now, probably some of these stocks that went up, 88% stocks of 60 total stocks went up. Some of them may be growth, some of them may be value. But this is the time also to look at the industry scorecard with a single click, that before looking at the peer stocks, do I really want to buy in this industry? Internally, the industry is strong, 88% went up, but what about relative score of the industry relative to other industries? Because remember, in Q techniques and in real life, everything is relative. 88% is strong, but what if there is another industry where 100% stocks are up? Maybe I should buy in that industry. So that decision comes from QH relative industry scorecard. For semiconductors, I can see using color coding, it is among the top 20% in terms of strength, and it is among top 20% in terms of acceleration, up by a massive, for an industry, 2% on Friday. That's enough for me. Top strength, top acceleration. Not many things can be better than that. Yes, it's up also. So actually nothing can be better than that in terms of industry. The industry is telling go ahead, buy. Now let's go back to the peer stocks. I could use the one star green button to look at the stocks that are, you can see if I sort, either undervalued or having high earnings growth here, or condition. With a single click, I found those stocks. Now I would like to find stocks that are up only, not only, by at least 1%. So I clicked one button here. I have all these stocks. Now I would like to look at some of these stocks. Now I actually did that already, and I will show them step by step. See where I started from. I started with the mega caps going up. I actually looked at the mega caps found AMD to have a clear breakout, but I did not want to buy AMD because its fundamentals were not good enough for me in terms of Q scorecard. So I looked at its peer analysis. Industry was great. So I look at some peer stocks, and let me look at some of them. Nvidia. I am combining different aspects of Q systems to demonstrate how one may use it. Different ways, very powerful system, but people may use it in different ways. And it's saying you are offline. Okay, no problem. I have two systems. So let's go to NVIDIA on Q Global on Metastock. Always good to have two platforms running the same systems. I have a backup. NVIDIA. Why I came to NVIDIA is that it is looking bullish on weekly, daily both. But I should go back to Q Elite on TradeStation. I want to show you one thing. See, the trend line resistance was broken already on Thursday. So yes, Nvidia is bullish, but this is an example of where we could buy on Thursday itself. On Friday, is it possible? Yes, it is bullish, but my always thought is, if we could buy on Thursday, why didn't we? Didn't we have enough confidence on the system? Of course, I have confidence on the system, but I was not doing this analysis on Thursday. I did not buy Nvidia. I would not like to buy on Friday. I specifically came to this example to say that I like to buy, and I do buy or short on the day I had the setup, not one day later. One day later is a bit too late. It increases the risk a little bit more, reduces the profit target a bit. I don't like that. So on Thursday, Nvidia could be bought, at least technically. Yes, fundamentally also it is allowing buy, but not on Friday. So let's look at some more stocks as of Friday. I have two more stocks, and you can see TradeStation is disconnecting and connecting many times. So let's try to open this stock SYNA on Q Global. I see Metastock nowadays is much more reliable. Of course, I like the radar in TradeStation, and it is a backup also for me. Metastock reduces the bandwidth requirement, and it is very stable, reliable. See SYNA, SYNA, Synaptics. It's a PR of AMD. SYNA. Remember, I did the PR analysis, and what kind of stock it is? Undervalued stock. What about earnings growth? It is actually negative. I showed earlier using Q Global Market Bread that my preference is to have high growth stocks for buying. Yes, I could still buy SYNA, but I'll see if I have another semiconductor stock that is high growth. SYNA also has a short squeeze potential. Went up by 3.4% on Friday. So it can be purchased. So let's look at the technicals again. It is breaking out from weekly, breaking out from daily. However, for my liking, the recent swing low is a bit far away. And another important thing I am looking at is that it was inside a range, and now it broke out of the range. But I don't like breakouts from a box and buy them. For a box, I like to buy at the support, not at the breakout point, because it's already moved quite a lot from swing low. I know other people may be happy to buy at breakouts from a higher level. I don't do that. Rather, if SYNA goes up more, I will patiently wait for it to make a higher low that will give me a flow trend following long setup, and I'll take that rather than taking a breakout from box. But it is a breakout setup, so I wanted to show. See, I'm showing multiple examples and eliminating one by one. I will be left with one example at the end, and I'm going to come to that stock now, where I have nothing against the stock. Let's look at the peer analysis of AMD. The stock is MCHP. It is also undervalued stock and it does not have high earnings growth but positive earnings growth. SYNA, SYNA had negative earnings growth. So if we look at them side by side, both in terms of valuation as well as in terms of earnings growth, MCHP, I think Microchip is the name, is a better selection. Also, fund accumulation is bullish in MCHP. I put weightage on that. Earnings quality is also better than SYNA. This scorecard is very useful. Remember, QVital not only creates a stock scorecard, it does a perfect peer analysis where we can find the better stock among multiple peer stocks. And in this case, the peer relationship is stocks belonging to same industry. So MCHP allows me to buy from fundamental point. And of course, this industry is one of the strongest, one of the most accelerating. What remains is to look at its technicals. Market, we have already decided that it's okay to look for some buy candidates. Let's look at technicals, the last dimension for MCHP. This is a much better breakout. It was inside a triangle in daily. It broke out and here the stop is not far away. Stop would be just below Friday's low using the Q protection signal. I also notice how beautifully, once again, the unique headwind signal caught the very low here. See, it was falling sharply. Then the bullish headwind caught actually the very low of the move. Went up enough to give a profitable swing trade, and as it often does, it retested the watermark created by bullish headwind. From that point, I am ready to look for buying again if the support held, and it did hold. It created false downside breakouts. I would not buy until the trendline resistance was broken, which was broken on Friday. So I have found a proper breakout setup, MCHP, that funds are also accumulating, that is in one of the strongest industries, great fundamentals in terms of valuation, has some earnings growth. So this is my stock of the week. I will not look at, in these market recaps, it's not my intention to share many stock ideas. Probably I could find many if I went through the detailed bottom up or top down analysis. That's not the point. You could do that yourself. I'm showing how an experienced trader finds trades where most forces are aligned and how he or she does not care about the name of a stock. It has to be liquid stock, but finds the most likely trade candidate. Now I would like to look at few more stocks, actually two of them. BMBL. This is an example I shared in the last market recap. Remember, last market recap I talked about two stocks only. One was SLB. I showed that made a profit easily or difficulty doesn't matter. It made a nice profit. It made a profit easily. And I did discuss BMBL in the last market recap when it was here. And I mentioned that I would like to buy if it could complete the breakout and go up. It would be premature to buy before the trendline resistance was clearly broken. And again, see, Q not only tells when to buy, it also tells when to wait. This is a perfect example of that. Q told us to wait, and that was the right decision. It came down. Yes, it is giving multiple bullish headwinds, bull release signal, however, indecisive candle, and more importantly, it still has many trendline resistances. I'm still bullish on the stock. It has high earnings growth based on that. If it breaks out of these trendline resistances in daily, that will also create a false downside breakout in weekly. This is how I identify an opportunity add it to my watch list and wait for the time it gives me a proper Q trade setup. Nothing unambiguous about it, no second guessing, just keep on following the stock. Another stock I'd like to look at, Netflix. See, all the mega caps went up. Netflix also went up on Friday. Why I'm mentioning it? It does not have any trade setup. I'm saying that upfront. And we can see the weekly is very indecisive, very different from SPY. If I see SPY, Netflix, microchip side by side, certainly I'm not going to buy Netflix. But it did find support at the white direction line with multiple bull release signals and a very bullish shape candle, bullish color candle on Friday, but no bullish flow, no flow setup. So it is no trade setup. I'm not going to buy Netflix, but I'm watching it for one reason, and this session is about how many ways we can use Q systems, and that is reason is because of Netflix seasonality. See, I looked at many stocks today, isn't it? If I go back, I looked at SLB, BMBL, AMD, Nvidia, SYNA, MCHP. None of them have as bullish seasonality in the month of October as Netflix has. What is the bullish seasonality of Netflix in this month? Let's find out using Q Vital, part of Q Dives, running on the most reliable and 100% real-time data possible in the whole world based on Refinitiv data. It retrieved data in real time for last 20 years. You could change it to 50 years if you wanted to. 20 years is my default setting. In the month of October, it has 70% bullish seasonality. Not 80%. 80% would be great, but still, if you see from January to December, based on last 20 years data, the best seasonality percentage that Netflix has is actually 70%, not 80%. So this is the best seasonality in terms of bullishness that we ever have in Netflix. That is one reason I am watching Netflix. And if I said that we saw that actually nothing matters other than the data. What I say is irrelevant. October has bullish seasonality. Let's check out its earnings date. I'm creating a scorecard for Netflix now that will also give me the earnings date from Refinitiv. Okay, unfortunately, at least as of right now, it did not retrieve the next earnings date. You may check that out from Icon or any other platform you are using. If earnings is coming in next couple of weeks, and if you have a proper bullish setup in Netflix, it does not have a technical setup now, not based on swing trading setups, but if you find a proper setup on weekly daily, you may look to buy based on its seasonality. And in terms of fundamentals, not great in terms of valuation, not very poor also, not great in terms of earnings growth. However, it is turnaround candidate from negative earnings growth to positive, and we can see earnings growth is going up for successive quarters. That is good enough reason to buy in terms of Q methodology. It has a short squeeze potential. 94% of peer stocks are up. So industry wise, it is telling it is okay to buy. And it is important for me to look also at this fund accumulation is bullish. So here, how did I come to Netflix? I looked at the mega caps and only one stock caught my eye as having the best seasonality in October. Among the stocks I shared in today's session, Netflix was that. It is at white direction line support trying to create a base. If it goes up, if you find a Q trade setup on daily, you may buy that if it is low risk, or you may look at precision entry chart, that is intraday chart, to find an intraday entry if you get that. So I looked at different aspects of Q techniques today: sector indices scorecard, technical breadth, market external view using ETFs, internal view using market breadth, etc., etc., even seasonality. And that brings me back to the point is Q systems is very visual. There is no table to be read, no numbers to be crunched, no parameters to be set, no indicator to be compared with thresholds. Everything is visual, everything is consistently color coded. What I did, what you may do is look at the trees and also look at the forest, then make a decision. And I found my trade of the week, buy side, MCHP, unambiguous decision. Whether it will make a loss or make a profit does not matter. It is still a good trade in my book. We are at 1 hour point. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next next weekend market recap. Have a great weekend, and as I always say, there is no reason not to do that, as these live examples show. No reason not to trade profitably. I hope you do that. Thank you and see you again.